One of the hottest and safest places to put your money is in good old-fashioned bonds. Americans crashed the government's website to get their hands on Series I savings bonds that were paying out nearly 10% a year ago when inflation was high. Now that inflation is falling, so is the rate on the I bonds. Let's get some common sense now from Craig Bolanos, the CEO and founder of Wealth Management Group. And Craig, you say it may be last call for that great rate on I bonds. Explain why.
Well, Angela, many Americans are familiar with U.S. savings bonds. In fact, I would argue if you grew up in the 70s, 80s, and 90s, you might have even received a U.S. savings bond for a birthday, a religious event, or some other celebratory life event. And those U.S. savings bonds were typically in the form of what we call double E. But last year, Angie, you and I talked about investors starting to embrace a different type of savings bond, the Series I savings bond. It's a cousin to Series EE. Now, the I in Series I savings bond doesn't stand for interest, rather it stands for inflation. And let's break down what that means for savers today. Series I savings bonds are a type of U.S. savings bond designed to protect the value of cash from inflation. And with inflation having hit a 4-decade high last year, investors flocked to Series I savings bond, whose interest that's again linked to inflation, actually topped out at 9.62%. Yes, 9.62% last year. But with inflation coming down, the amount of interest to be earned on Series I savings bonds today, well, it's also dropped. New bonds being issued through the end of April 2023 will come out at a rate of 6.89%. Well, it's less than the 9.62% last year, but 6.89 is still not that shabby last time I checked. So what do I think people need to do? It's kind of last call for their Series I savings bonds, and I think people should get informed.
Wow, that is a huge drop. What are the details investors need to know if they want to get into I bonds before that potentially happens?
Well, Angela, let's break it down. The maximum amount that can be bought in a given year is $10,000 per person. But if you're getting a tax refund, you can actually redirect up to $5,000 of your tax refund into additional Series I savings bonds, bringing your total to $15,000. Now, if you buy a Series I savings bond, you have to hold it for at least 12 months. And if you redeem or cash in your Series I savings bond prior to 5 years, you will lose 90 days of interest. Now, the amount of interest that's credited is going to fluctuate. It's going to be adjusted twice per year. That's a semi-annual basis based on the current rate of inflation in the United States of America. My name is Craig Bolanos. I'm the CEO and founder of Wealth Management Group. We exist to help you get retired and stay retired. If you'd like to learn more, you can. Go out to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.